Well, hello everyone. Thanks for coming today. I'm John Thomas, the Mad Hedge Fund Trader, and I have titled my webinar humbly and in the most sincere way possible, the best trading system in the market. I know that because I've been in the market for 50 years and I haven't seen a better trading system, and if I did, I'd change my system to beat it. So welcome me today. I'm broadcasting from Silicon Valley, California, where we finally have some sunshine. One day of sunshine after a week of rain, and yes, it's going to rain every day next week too, which is why I was warning about the internet. We have an underground system, but it doesn't always work. This is probably going to be the most unusual webinar you've ever been to, so stick in to the end because I have made a lot of changes from the past. Let's move on here. Why listen to me? Well, 50 years of experience in the global financial markets, 10 years as the Economist magazine correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley. You may have heard of them. Marine Corps combat pilot in Desert Storm, and I do have to take strong disagreement with Wiz's comments about Marines. You should say what we have to say about Navy people, who we call squids. 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and I still have oil under my fingernails from that one. And now 12 years publishing the Diary of a Mad Hedge Fund Trader, and this is my retirement gig. This is what I do instead of playing golf. And I am one of the few founders of the modern hedge fund industry who is still breathing and still trading. A lot of you have been following me for many years, and it's time to tell you who I am. I had the typical American upbringing. My grandparents had a farm in West Los Angeles, which is now known as Wilshire Boulevard. I'm the oldest of 7 children. That's me there on the left, missing a front tooth. Notice the string ties from the 60s. Played Little League Baseball, went into the Boy Scouts, became an Eagle Scout. So far, everything is great. There wasn't much to do in California in those days, so I hunted rabbits, developed some good hand-eye coordination, which would become handy later. Got a job as a newspaper boy for the Los Angeles Herald-Examiner. I remember delivering this issue of the Kennedy assassination. That made me all of $50 a month. And I was able to save enough money to buy a trip to Europe in 1968 where I hitchhiked around the continent. Looking at the newspaper every day, I found this page which had a lot of funny numbers on it. You know, ever the inquisitive one, I found out they were stock prices and they went up and down every day, and you could actually make money doing that. So I did my first trade when I was 11 years old, buying IBM at $20, and I sold it at $30. And I thought, wow, this beats the hell out of carrying around a bunch of newspapers every morning. So I started trading stocks on a regular basis, and with the paper out and my stock trading, I had enough money to take off for Europe for a summer. There I visited more than 50 countries and learned how to speak about 4 languages. I can say JTEM in at least 5 languages now. You know what that means? Time to the next page. Being good at numbers got me a full scholarship to the University of California and managed to graduate there with a degrees in math and biochemistry. On graduation, I got a membership in Mensa, which is the genius organization. Most boring club I ever joined. I only went to 1 meeting. But, you know, in the early 70s, being good at math, you only could get 2 jobs. You had a choice of teaching at a university, which was kind of boring, or making nuclear weapons for the Defense Department. So I chose the latter, and what I saw was unbelievable. I got to work in Area 51. They were still doing underground tests in those days. Occasionally we used to fry a Nevada rancher by accident because of an unmapped earthquake fault, but that was an experience that was unbelievable. And about that time, they started negotiating the nuclear treaties between Russia and the United States. Didn't see much of a future. in those days, yield meant millions killed and not how much interest you got paid. So decided to move on to a more interesting job. So the government sent me to Southeast Asia to gather intelligence. The Vietnam War was still going on, managed to pick up a pilot's license on the way. And that took me on to the next stage of my life, where I covered Southeast Asia for a couple of years, provided support, ended up getting shot a few times, jumped out of quite a few airplanes, and after 20 years of on and off service, I ended up with a drawer full of medals and thank you for your service, and that's about it. And as the Vietnam War wound down, I became a correspondent for The Economist magazine. And when they figured out I had a math background, they thought it would be a good idea if I covered the stock market in Asia. And that is where I went next. Of course, got to meet quite a few interesting people as a foreign correspondent, covered China during the Cultural Revolution, had to have a bodyguard with me at all times because if the Red Guards found you, they lynched you on the spot. Also covered a lot of World War II battlefields. You can see in the bottom here, here's a bomb I found on Saipan, and still a lot of debris left over from World War II at that time. Oh, and there were still Japanese soldiers fighting in the jungles in the 1970s. They didn't surrender until 1974. I was also one of the first correspondents to visit North Korea. There I am on the UN side of the table, and that was an experience also. Getting into the stock market, I figured out very quickly you don't have to be that smart to make money in the stock market. If you needed geniuses on Wall Street, they would have to shut down the business because there's just not enough of them to go around. Turns out average people can make money stocks too. So I started working in the Tokyo stock market, later joined Morgan Stanley to set up their international equity division. Look at the aging process. And on the side, I practiced karate in Japan for 10 years. This is me losing the Japan National Karate Championships. Warning, it's tough to fight with a broken right wrist, which I have right in that picture. And needless to say, I lost, and my wrist still hurts when it rains. However, you don't want to run into me in a dark alley when I'm in a bad mood. Went into the fund management business and quickly became the top performing hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. Got all kinds of awards for being the best hedge fund in the world. We made tons of money, got my SEC registration, and all of a sudden business was booming. Turned out I was pretty good at the hedge fund thing too. Of course, when the money really started to pouring in, it's an understatement to say that when your income goes from the thousands to tens of millions, it has a big income on your lifestyle. For a start, I had my own private plane. I could fly around Europe anytime I wanted. Had vacations of a lifetime, started collecting vintage Rolls Royces, and when I moved to the United States, got the latest Tesla Model X. So I sold my hedge fund, made a lot of money, went into the oil and gas business for 5 years, made a killing being one of the early frackers in natural gas. And missing the excitement of the financial markets, I started Diary of a Mad Hedge Fund Trader in 2008. And this is the recent letter we send out, Mad Hedge Fund Trader, Global Trading Dispatch. And this goes out 5 days a week now. We have averaged a 33.83% on our trade alerts since the beginning 9 years ago, and that is a performance to die for. I am now in my 60s, and I spend my time living in 3 different mansions around the world. This is my home in San Francisco, where I have a 360-degree view, can see 100 miles in any direction. And that's a really cool place to have parties. Also have a lakeshore estate at Lake Tahoe and Incline Village, where I do a lot of my trading from. And then I spend the summers in Zermatt, Switzerland, where I have a chalet at the foot of the Matterhorn. I've quit turning millionaires into billionaires. That's what I did in my hedge fund. There's far more satisfaction in leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account of yours and turn it into 500,000, that has far more job satisfaction than I can get doing anything else. However, every silver lining has a cloud. This is my tax return from last year. I made $10.5 million trading, $3.8 million in taxes. Yikes. That's enough to buy an M1 tank. If you're wondering why I'm so interested in the military, it's because I pay for it. Those are my toys they're paying for. You know, $4 million is about enough to buy an M1 tank. So it's a problem you wish you had. You do have to pay the taxes. It's a privilege of living in this country, the greatest country in the world to make money in. In my free time, I fly vintage airplanes and been doing this for 40 years now. So if you see an aircraft doing loops over San Francisco, London, or Zermatt, probably it's me, something I love doing. That's a 1932 de Havilland Tiger Moth. That's a Boeing Stearman from the 1930s. That's a 1952 RAF Chipmunk, Royal Air Force, and that's the Stearman again. My other great passion is charity. The ultimate luxury is to give money to people who need it. I'm a major sponsor of Wounded Warriors. I do grief counseling for the Marine Corps, for the widows and orphans of guys who didn't make it back. And it's heartbreaking to meet these people because sometimes they just want to hold the hand of someone who came home. Also, when the wildfires hit in California last year, I went over to the major evacuation centers and handed out $10,000 in Target gift cards. People needed everything. They were given 30 seconds to get out of their houses. The police told them to grab their car keys and run. And, you know, most people made it. We had 2 family members lose everything. Their houses burned down in Santa Rosa. This is a picture of their house. And the money was well invested and well spent, I'm sure. So I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from a complete beginner to a seasoned pro in weeks. Learn how to quit your day job and trade full-time for a living. Trade anywhere from any time. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And this is a picture of me sending out a trade alert from North Africa. Yes, all you need is broadband, and you can earn a full-time living anywhere. Pretty much everywhere has broadband these days, except North Korea. This is the harsh truth. This is why you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Anything you find on the internet is suspect. Wall Street is all about moving money from the uneducated to the educated, and that's them. The easy solution to that problem is to get educated yourself by following my service. Fidelity did a 20-year study and learned that their top-performing investors were dead people. Why does that happen? Well, first of all, dead people never sell. That's not a bad plan in a 10-year bull market. But also, dead people don't overtrade. They don't sell bottoms and buy tops. These are all sins committed by your regular individual investors. And by the way, this is the original Pinocchio I found in northern Italy, where the story comes from. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. It's just noise. It's just a waste of time. Too many focus on the irrelevant and miss the most important parts of the market. My job is to show you the 5% you really need to keep a laser focus on. There are a few great sectors out there and a lot of awful ones. You can earn 10 times your money on the great ones, but get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is my secret weapon, the Mad Hedge Profit Predictor, my market timing index. This is an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. As of Friday, we had a reading of 60, which means the market is slightly overbought. 50 is dead on neutral. We got all the way down to 2 on December 24th. We got as high as 76 just last week. Why do you need an algorithm to trade? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. The estimates are now that anywhere from 70 to 90% of all trading in the market is done by computer algorithms. It does the work of a seasoned 100-man research department in seconds. It runs real-time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 30 times a day. That's what I've got. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined, systematic trading discipline that will enhance your trading profits. I stumbled across this yacht, this mega yacht in Miami, and look what it's called, Algorithm. That shows you the power of trading algorithms in the market. This guy got a yacht, you can too, just by using the correct trading algorithm. This is 3 years of our profit predictor performance, and you can see we get several round trips a year. We get sell signals at market tops, buy signals at market bottoms, lots of round trips every year, and you can see we're right up here close to the sell or go short level in the market. That said, we could chop around the top for a couple of more months before we enter true bear market territory. Just let me show you how we did with our algorithm against the S&P 500, which was up 59.44% in 3 years. The Mad Hedge Fund Trader was up 113.77% over the same time period, double the S&P 500 performance with less volatility. Notice that we have big up spikes, we go sideways, spike up again, sideways, and so on, year in, year out. That's typical hedge fund type return. We try to limit any drawdowns in our performance to about 5%. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. Not a lot of future in cigarettes, at least not here in the United States. After making $3.4 million with the Mad Hedge Fund Trader, he still farms, but now he's growing grapes in California's Napa Valley for the high-end wines, and that is a much better profession, living in a much better place to live than rural Virginia. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. Philip now trades whenever and wherever he wants and doesn't carry around a year-round sunburn like he used to. And he says he's never lost any money on a John Thomas trade. Jackie was an Australian hospital administrator who turned $50,000 into $2 million with the help of John Thomas and became a major player in technology stocks. She's now retired in her 50s and spends her time cruising around the world. She got the $2 million. I get postcards from all over the place. This is a picture she sent me from the first class dining room of the Queen Mary on a round the world cruise. She told me she was making so much money trading that her husband used to slide dinner under the door to keep her at her computer, raking in big bucks. And that was Australian bucks in her case. These are the 5 surprises of 2019. And I put in red the ones that haven't happened yet, and in black the predictions that I made at the beginning of the year that has already happened. The government shutdown ended, and the Fed makes no move to raise interest rates. In fact, the Fed had just announced on Wednesday they're not going to raise rates this year. 2.5 months ago, that was considered heresy. Now it's the accepted wisdom. Chinese trade war ends. That could happen in a couple of weeks. U.S. makes no move to impeach Trump, focusing on domestic issues instead. And the Mueller report, which is out yesterday, pretty much backs up that view. Britain votes to rejoin Europe. I think that'll happen in a couple of months. When that happens, that'll be a huge positive, not just for Britain, but for the global economy. The Trump investigation concludes that he has an unpaid parking ticket from New York in 1974, and that's it. No more investigations, no more prosecutions. All of the above are hugely risk positive and will trigger a monster stock rally. Let's talk about stocks for a second. The bull market lives. 10 years old and still going strong. Stocks are breaking out to new highs. Traders are focusing on low and falling interest rates as the sole driver of stock prices and ignoring everything else like the economy, earnings, and valuations. This will eventually end in tears, but we could be running to new highs for the next couple of months as interest rates are extremely low and falling fast. Investors flushed out during the December bottom are piling back in at the top now, and when they're done, it's all over. However, they really only started buying a couple of weeks ago once it was clear that we were running to new highs. Analysts are now looking at negative earnings growth in 2019, but who cares? Trade war settlement is 95% in the market. If for some reason there is no trade agreement, we go back to 25% tariff increases, we'll lose that 95% gain very quickly. In a world of hurt, the U.S. is still the safest and highest returning place in the world to invest. You gotta love America. This time it's different. The return of QE is hugely positive for stocks. The Fed announcement of no more interest rate hikes in 2019 is a major positive. So is the end of its balance sheet unwind this coming September. That effectively injects $2.7 trillion worth of cash into the U.S. economy and is the equivalent of 2 surprise interest rate cuts. You wonder why stocks are going up so fast? That's the reason. When the world goes from QT to QE, or quantitative tightening to quantitative easing, overnight you go risk on. China trade war settlement, which could be weeks off, will pour the gasoline on this trade. What is the smart money doing now? It is focusing on the highest quality growth stocks with the best earnings outlook. They're also hedging out potential downside risks with options and bear ETFs. They're buying gold on dips for return of a weak U.S. dollar and inflation in 2019. When you drop interest rate on a currency, it can only go one way, and that is down. Pouring into the big QE beneficiaries like the big technology stocks, which led for the last 3 years. And if you're wondering why I'm in such a good mood, I'm doing aerobatics in a P-51 Mustang. If you don't know what a P-51 Mustang is, that's what it looks like. It's a World War II fighter, one of the most powerful piston engines ever built. I think this one had a 2,000 horsepower engine on it, and flying it is an absolute joy. And when I get tired of flying P-51 Mustangs, I fly British Spitfires. This one flying over the White Cliffs of Dover, and I'm booked to fly this plane next summer over England. Let's see how our algorithm works in looking at markets. Final destination target for the bull market is approaching. We're looking for 3,200 in the S&P 500 sometime this year. Notice that we had a strong sell in the market where we went short last September, and then we bought the Christmas Eve massacre down here when our trading algorithm started screaming at us extreme buy. We bought this, got a quick 4,500 point move in the market in the Dow, or many hundreds of points, and we think there's still a few hundred points left to the upside, and then it'll be game over. Time to pick up our marbles and go home. Same thing with the NASDAQ. We were essentially leveraged long for 2016, 17, and 18 in technology. Some of these stocks went up 10 times, got out at the end of September, got back in December, and now we're looking for new highs in technology. Our final target sometime this year for the NASDAQ is 8,500. Energy, we have a new bull market there too. China is the world's largest marginal new buyer of oil. They're buying more than 50% of all the new oil that comes onto the market. Massive stimulus in China will revive the economy there and substantially increase oil demand. U.S. infrastructure is still constrained, all kinds of permitting and construction delays. So no matter how much oil and gas we have, we don't have the ability to get it to the ports fast enough where we can export it to, you guessed it, China. OPEC has reformed along a Saudi or Russian axis, enabling there more price control. That's another reason why we've gone up nearly 50% since the bottom last year. Bottom line, buy the dips in oil ETFs, and oil companies. Chevron's one of my favorites. We got a major buy there in July of 15. Since then, the stock has almost doubled. Got a sell here at the beginning of 2018. Went back in the Christmas Eve massacre. We see new highs in Chevron from here. Here's the price of oil, same sort of deal. You can see the bottom back here in 16 at $26. Remember the futures day very well. And we've been basically buying these bottoms all the way along. Have a buy here looking for new highs. And a sideline of the oil trade is also the commodity trade. We think a major bull market is also starting in commodities, especially copper. When China is stimulating their economy, you want to buy everything that China buys, and China happens to be the world's largest buyer of copper. And we've already made a lot of money this year on copper plays and the plays of copper producers. Foreign currencies, you drop the interest rates, you drop the dollar. Continued dovish Fed will drag heavily on the dollar going forward. We're close to a one-year high right now. That is a big positive for weak dollar plays like gold, the Australian dollar, and emerging markets, which have been on fire this year. British pound is staging another huge rally on a Brexit fail, and I expect eventually they'll have another referendum in England, and they'll vote down Brexit, and that'll take the pound from 129 today up to about 165, where it was before the last Brexit vote. Massive Chinese stimulus is driving the yuan higher. Avoid Bitcoin. The bubble has bust. There are too many better things to buy. Bottom line, sell dollars, buy the Australian dollar. U.S. dollar, there's the UUP. That was our high 2 weeks ago. We got a sell signal there. We were long pretty much all of last year. The next major move in the dollar is down. Emerging markets also, they have taken off with the prospect of the dollar rolling over. We got a major buy in 16 down here. Came out of everything in 2018, and we got back in again right around the Christmas Eve massacre and have had a huge return. Looking for new highs in emerging markets. They are about half the valuation, half the multiple of current U.S. shares. So they have a lot more catch up to do. Bonds, the bear market is dead. We issued 62 trade alerts over the last 3 years to sell short bonds. Every one of them except one made money. That's a pretty good record. With the out of the blue new Fed policy, that is game over. We're now looking to buy bonds on any dip. Fed ultra dovish policy brings new life. Treasury yields have plunged to 242, a one-year low. U.S. government borrowing is about to double from $1 trillion a year to $2 trillion this year. In the final stages of a liquidity-driven bull market like we've had, you buy everything. Yes, both stocks and bonds go up, and we have entered that phase of the market. This interest rate cycle peaked last year at 325. The next target on the downside in yields is 123. After that, we could hit zero interest rates in the U.S. or even negative interest rates in the U.S. At the bottom of the next recession, which is probably only a year off. That means the refi opportunity of the century is coming up, but only if you still have a job and still have credit. You can't refinance your house if you are unemployed. Bottom line, buy every dip in the TLT. And let's see what these charts look like. Again, long-term charts. The bond market peaked in 2014. We've been long, 62 times. Went short here finally, bought it again here, and we can see this much better in yields. Our initial downside target in yields is 137, down from 266 last week. Then we went to 244, and our initial target is 137 and then zero below that once we go into recession. Precious metals, the ultimate hedge. Gold will break to new highs as investors look for risk-off flight to safety hedges. Central banks have become the principal buyers in gold in 2019. Some 264 metric tons last year, a lot more this year. China and Russia have been the dominant purchasers. Distrust of current U.S. economic and monetary policies is the incentive. Bitcoin stole gold's thunder in 2017 for a year, but the crash has ended that. That's me in the gold market in Istanbul. I do tend to get around a lot. Bottom line, buy every dip in gold and precious metals. Here's our trading algorithm kicking in on gold. We got a major sell, missed the entire bear market. We now have a new bull market that's starting here. You want to buy the dip. We bought the dip here. I've already taken out $100 on gold to the upside, and we think it's going to the old high of $1,927. Take us a couple of years to get there. Here's the GDX. Also, gold miners getting very close to a major breakout to the upside. Not too late to get involved, and we cover a number of gold stocks, which I've been covering myself for 45 years. I know extremely well, know all the managements, and know which the best ones to buy and which ones to avoid. Barrick Gold is one of our favorites. We're also getting major long-term buy signals here. So look for a doubling of this stock in the next couple of years. Caterpillar, what do you need to dig gold mines? You need Caterpillar tractors, the good old D9s. We had a major buy at the beginning of 2016 based on the tax cuts and the stimulus package. We sold out the beginning of last year. We went back in again right around the Christmas Eve massacre. We're looking for new highs for Caterpillars. If you want specific timing on the entry points on all of these stocks, hang on. There is one other investment opportunity out there. It's where the future lies. That's an investment sector of one. Yes, I'm talking about Tesla. There really is nothing else like it. It's not really a car company. It's a technology company, but also has a gigantic manufacturing base, which they are expanding at a record pace. Their total production this year will hit 500,000 units. I've been with them when I bought car number 125 from them. So I've been in since the beginning, and I've also been following the company back when they had the Roadsters, which was a $100,000 car, which then only got about a 100-mile range. They're building a second factory in Shanghai, China, which will help take them to the 500,000 target. And in 2021, they'll bring out the Model Y SUV priced at around $39,000. U.S. electric car sales have risen from 0% 10 years ago to 4% today. It'll be 100% in 20 years. Tesla is already outselling all premium car brands in the U.S. combined, including Mercedes, BMW, Audi, and Jaguar. Many countries and U.S. states have banned the internal combustion engine. By 2030 or 2040, you'll only be able to buy electric, and Tesla has a 10-year head start over everybody. They will become the world's largest car company within a decade, causing the shares to rise tenfold. We first got involved in Tesla back here in at $16.50. That was a great buy. Waited for the IPO. It dropped by half, and that's when I got my people in. And that's what I always do on these hot IPOs is I wait for them to drop by half because they're almost always overhyped at the beginning. $16 to $3.94, that is not a big return. When it hit just short of 400, got out. We've been in ever since. It's looking now like Tesla's going to have a terrible quarter. That could cause a capitulation sell-off to The under 200, if we can get it down there, then that's the buy of the century, because after that, the stock goes from 200 to 2,000 a share. So get ready to buy now on the next capitulation sell-off, which could be down 10 to 15% from here. This is my latest Tesla. It's a Model X high performance, 149,000 tricked out with the ludicrous mode. With taxes in California, it's 162,500. And going from 0 to 60 in 2.9 seconds is a thrill. However, be sure to carry airsick bags in your car from the airlines, because normal people react adversely to going to 0 to 60 in 2.9 seconds. I'm a combat pilot. I can do aerobatics, so it doesn't affect me. Normal people or kids, not so much. This is my first Tesla, chassis number 125. It is the safest car in the world, but doesn't hold up so well when you get hit by a drunk driver on Christmas Eve, which is what happened to me. Completely totaled the car. I just got out, walked away, took a picture of the guy's license plate and just handed it to the insurance company, and Tesla got me a brand new car the next week. Was going to donate this to the Smithsonian, but obviously in this condition, I doubt they'd be interested. You can see the 1,100-pound lithium-ion battery under the back seat and the carbon fiber wheel wells, which makes it the world's safest car. In 10 years, this 1,100-pound battery will weigh only 100 pounds, but you'll still get a 300-mile range. Safe to say the car has a lot longer range than your bladder, which is really all you really need. So what do we do about all this? Stocks, well, you want to buy the dips. Bonds, you want to buy the dips. Commodities, buy dips. Energy, buy dips. Currencies, you want to sell. Dollar rallies. Precious metals, buy dips. And by the way, you very rarely see everything line up like this, and that only happens at the end of a liquidity-driven investment cycle where people just panic and start buying everything, and that's obviously what's happening. So if you're not up 32.9% in the past 12 months as I am, you are reading the wrong newsletter or following the wrong trade mentoring service. 32.9% trailing one-year return. We're at an all-time high here, and as I mentioned before, we tend to flatline, go to new highs, flatline, go to new highs, and this has been going on for 9 years and really 12 when we started doing the trade alerts. Here's the long-term average, 34.12% average annualized return for 9 years. It's a return any hedge fund would kill for. You get a return like this, you tend to get the perks in life, like owning the owner's, taking the owner's suite on the Queen Mary from New York to England. That's a mere $55,000 for the week. All you can eat and drink. And oh, you get 2 butlers with this suite also. When you get to England, you can take the Orient Express from England to Venice, Italy, and that's a total blast. Every dinner is black tie. And you don't have to worry about traffic anymore. You just take your private helicopter to go wherever you want. So traveling can be very fun when you have your own helicopter. Here's the very long-term view, the 30,000-foot view of the markets. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy like us, fade from the scene. This will create an economic boom that will last another decade starting in 2029. So if you have money now, hang on, because making money in the 2020s is going to be like falling off a log. And this is a picture of me in Zermatt, Switzerland, watching climbers come down from the Matterhorn. Are you ready for a replay? The last time we had a demographic wave like this, the Dow average went from 600 to 12,000, from 1983 to 2000. That is a 20-fold increase in 18 years. What's going to happen next? Answer, a 20-fold increase in 18 years, starting in 2009 and taking us all the way up to 120,000 by 2027. Yes, this may sound ridiculous, but then in 1983, it sounded ridiculous that the Dow could ever reach a level of 12,000. That is exactly a 400% return, which is what we got from 83 to 2000. Expect that to be your return from 2009 to 2027. We only have the minor issue of how to deal with the next recession somewhere in the next 18-year stock market performance. But then again, that's why you listen to people like me, knowing when to be long this market and when to be short. So who will show you how to play the next 95,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, in my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 32.9% in volatile markets. Follow my research and my market-beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading record for 1 month. You can see we do like 10 to 15 trades a month, playing on the long and short side in all asset classes. We bought the S&P 500, made a 16.3% profit on that, sold short the treasuries, made 8%, bought the Russell 2000, bought Amazon, bought Apple, went long Biogen. Oops, we stopped out due to a certain presidential tweet. We stop out of losers very quickly because we know 90% of the time the next trade is going to be a winner. It's easier to dig yourself out of a small hole than a big hole. Then we went on and bought Palo Alto Networks, sold short the yen, bought U.S. Treasury, sold U.S. Treasuries, bought the SPYs, and bought gold. With the China trade war about to end, it is just a matter of time before technology stocks break out to new all-time highs. Watch this space melt up going into the end of 2019. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch trout, which I caught in Pyramid Lake in Nevada, and that is close to a record. Here's how it works. We saw that Micron technology was ready for a major breakout thanks to the market timing algorithm that we've got. So we sent out a trade alert. It says buy Micron technology at 4201 or best, and you buy 238 shares for a 10% exposure of a $100,000 portfolio or $10,000 worth. This goes out by email and text alert. You get it in 5 seconds. What happened? Well, we got a 15.63% profit in Micron technology in 15 trading days. So did we sit around and pat ourselves on the back? No, we sent out another trade alert saying take profits. And it looks like this. Take profits, sell Micron technology at 48.58 or best. And the profit on this trade was $1,563. Not a bad return on a $10,000 investment in 15 days. And why do we take profits on our trades? Because this can happen. We took profits here, at $48, $48.53. It then goes down to $29. So yeah, we missed that hit. And what did we do after that? We went long Micron technology at the Christmas Eve massacre. So yeah, having a timing algorithm helping you on these trades is worth its weight in gold. Another 50 years of trading experience for me is also worth its weight in gold. Here's some of the other things we recommended. NVIDIA at $68, it went up 267%. We did Lam Research, recommended at 135. That was up 77% in 10 months. We did Baidu at $12.50. It went up 2,240% after that. With my Global Trading Dispatch service, you get a daily research newsletter, instant trade alerts sent out at market sweet spots, about 200 a year, live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world. We do about 25 a year. More educational videos and webinars than you could consume in a lifetime, and access to a 12-year database on investment ideas, searchable by names and ticker symbols. I'll even give you the name of a good surfing camp in North Africa with a seniors division. Yes, warning, it's a lot harder than it looks. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000 a year. That's what I charge my big hedge fund clients, and they're happy to pay me because I make them millions. I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can be their investment 911. And I'm not going to charge you $5,000. That's what I charge my advanced option trading clients. And I'm not even going to charge you $3,000. This is the cheapest price on my website and the lowest price I've ever offered online. This is a real deal. Creating this product cost me millions of dollars. With the best customer service in the industry running it cost me millions more. Here's the offer you can't refuse. 3 months for just $497. You can only get this offer through this webinar today, right now, and Janine is going to put in the chat box a link that will take you to the dedicated sales page where you can find this offer. That is the only place you can find this offer. Just click on the chat box on the right. And Janine, if you can go ahead and put that in there now, I'll move on.
Hey, I just want to make sure I have the right link.
Oh, okay. Good idea.
It's madhedgefundtrader.com/TTSP. Is that right?
That sounds right.
Well, we'll see what happens next.
If it's not,
We're super on point here.
I don't think you have any other Mad Hedge Fund Trader links floating around there.
I don't, but I just
one.
literally brought that up off the top of my head from looking at it earlier. So anyway, we're posting. We'll see what happens next.
Okay, this is a limited time offer. I can only take 25 new subscribers at a time because the combined market impact of our trade alerts can really move prices a lot. So it's first come, first serve. I can't wait to make you a top drawer trader. Let me make the money for you to pay for your subscription. You make the trades in your own online trading platform. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Let's see, let's move on here. Now things are jumping around. Let's move on. Okay, I'm going to take some questions now. You guys can read these testimonials from our 6,000 current subscribers. Jim in Dallas, Texas wants to know, are the trade alerts for stocks, ETFs, or options? Jim, we do all of the above. We send out a range of possible securities with every trade alert so readers can tailor it to their specific needs and risk profile. If you don't do options, it's no problem. We're also sending you at the same time recommendations on stocks and ETFs. Joe in Detroit, Michigan. I've never done this before. Can a beginner start with no prior experience? Absolutely, Joe. Bringing beginners into the market for the first time is one of the primary goals of this service. Mary in Kansas City, Missouri. How many trade alerts do you send out in a year? Mary, we send out about 200, depending on what the market is doing. When the market is active, we can send out up to 5 or 10 in one day. When the market's dead, sometimes we won't do any for weeks. You don't get sweet spots in the market every day. They tend to bunch up, and we send them to you as soon as a sweet spot opens up in the market. Okay, more questions here. That's me in New Zealand with real live black swans. Yes, they do exist. They're not a myth. Another question. You obviously have enough money. Why are you doing this? That's funny. Teaching people how to make money and secure their financial future is the love of my life. When I was on Wall Street, I used to see so many people get ripped off by brokers, it made me sick. This is my chance to level the playing field for the regular guy like you. Okay, another question here. Let me look. Ivan in Portland, Maine. How would you describe your trading philosophy? Ivan, I use fundamentals for my long-term call and technicals for my short-term execution. That's what every long-term pro does, and I have my algorithm to help organize everything in a coherent fashion so I know exactly when to go long and exactly when to go short, and it works 90% of the time. And the losing 10%, we stop out of very, very quickly. Okay, Roger in Richmond, Virginia. Do you offer training with a subscription? Roger, we include more training you could use in a lifetime with books, options, training courses, and so on. Every trade alert that goes out includes a link to a video on how to execute it in your own online trading platform. To understand this program, literally all you have to do is know how to turn on a computer and how to click on an app. Okay, more questions here. Can we talk to you directly? Roger in Portland, Oregon is asking. Roger, I spend part of every day calling readers and answering emails, looking for ways to improve the service. You can email anytime and always answer the same day, usually within the first. And you get a chat bi-weekly strategy webinars like this one, where you can ask me any questions you want. Okay, more questions here. Joel in New York City wants to know, how often is this newsletter sent out? Joel, every day the market is open. That's about 250 times a day. On top of that, you get another 200 or so trade alerts a year. So you will not be short of content when you subscribe to our service. Let's see. Here's another question from Nigel in London, England. Is the strong dollar over? Yes, when the country lowers its interest rates, means you get less return on that currency, and that is a disaster for that currency. So, yeah, get ready to start shorting the dollar and buying the euro and the yen and the Australian dollar. We're about to have a major reversal in the currency markets. Also, I'd like to add that if you subscribe today, you'll get a copy of my best-selling book, Stocks to Buy for the Coming Roaring 20s. We just updated the second edition. We sell this normally for $49. You get to have this for free. And it shows you sectors and stocks that will lead the market for the next 20 years. Warning, a lot of the stocks have already doubled, but they still probably have a tenfold move in them left. Also, if you subscribe today, you will automatically get a trade alert, which you can execute at the Monday opening. I use the Friday closing prices, and there is an extremely high probability that this trade will succeed and make money. So make some of the most serious money in your life. Don't leave good money on the table. Subscribe now, and you will receive a trade alert immediately. And just to tease you a little bit, here is a 3-month chart of that trade alert. I took the name off. I took the prices off. I left the dates on. You can figure out what the name is, but you won't know if the trade alert is a buy or a sell short. So subscribe now. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you and send you these practically every day of the year under which stocks you should be buying and selling short. So here's the offer you can't refuse. 3 months for just $497. Let me show you how to make the money to pay for your own subscription. Just click on the chat box on the right. And Janine, were you able to find the correct link?
Hey, yeah.
Yeah,
It looks like it's
that
working.
looks like a link.
You should
Oops,
find it on your pull up your web browser and type it in.
I will. Oh wait, something's happening. Let's wait. Oh yeah, hey, that's me. How'd you get a picture of me?
Type in www.exportrader.com/TTSP.
Oh, that sounds pretty easy
Did
to
it work?
me.
People say it's not people. But
Yeah, there's our offer, $497 for 3 months. You will never see that anywhere again. Okay, I'm going to go through a few more questions because I got about 3 more minutes. Let's see. We got. Here's a funny one. Jim in Palo Alto wants to know: are you an algorithm or are you a live human? No, but I play one on TV. If I knew a good machine noise, I would make one right now. How about or grr or grind? That's no good. Come to one of my lunches and find out. Pinch me, and if I bleed, then you know I'm real, but you might also get a punch in the nose. So that may not be such a good idea. Okay, and I've still got a lot of questions here to go through. Okay. Have you got any questions at your end, Jeanette?
yeah, so have you been able to see the questions in the chat box?
Yeah, let me, I see links in the chat box.
No, I'm in the questions. Somebody's asking, let's see, what will the cost be after 3 months?
Oh, well, after 3 months, you can have the option to renew or just walk away. We don't do auto renews here at Mad Hedge Fund Trader like a lot of other people do. We have an extremely high renewal rate. It's about 90%. You know, for some reason, people like the idea of making money and they want to stick with it. And we have a lot of customers who've been with us for 5 or 10 years or even more. So I think our oldest customer is 12 years old right now.
All right, perfect. So the answer is no auto renew. If you want to stick around, they'll let you, and you just
Yeah, we always thought auto renews were kind of a scam. You know, if you don't pay attention to your email and you get $497 show up on your credit card, that can be kind of annoying. So, yeah, we don't do that.
Scroll through these in about 6 minutes. All right. Sean is asking, do you use price action mainly?
Oh, wait, here, I found the question box. Let's see. Let me go find some more. Do you think British Airways is going to tank? Answer, no, I don't. This is one of the best quality companies in the United States. It's already dropped 20%. And when all the worst things in the world have happened to it, what happens next? Answer, a good thing, like recertification, ungrounding of all the planes, and return to mass production and deliveries, and that will take the stock to a new all-time high. Could we drop another $10? Yes, but coming in at these levels is a great long-term play for one of the best quality companies in America. Let's see. Here's someone here. Any guarantees? No, guarantees are illegal according to the Securities and Exchange Commission. I bet most of your other newsletters don't know that. And $497 is the test subscription. We normally charge $3,000 a year for this subscription. We want to get you in for 3 months for $497 to prove it makes money before you make any other further optional commitments. I've just signed up. Looks great. I can't wait to start. My father served on the Intrepid. Have you been there? I actually have been on the Intrepid and in New York. And I have a long history with aircraft carriers. I've been on quite a few of them, especially during the Vietnam War. We tend to base our intelligence missions in those days out of carriers. And yeah, great comment, and thank you very much. Here's a question. Missed the seminar, missed up on the time. Jeanette, are you going to replay this some point in the future?
Hey, yeah, we will. We'll have on TradeThirsty's site. We'll do an email out with the recordings once they're all, produced on the page, and then it'll also be on our site at TradeThirsty.com. Probably by assuming no technology.
Okay, here's another question from Bob. Just signed up. Thanks for your service. What do you feel about the banks? banks I would not touch with a 10-foot pole. I wouldn't touch them with anybody's money. They're a legacy industry. They're dying. Their lunch is being eaten by fintech. So avoid the banks. If the banks couldn't go up in the best case scenario of rising interest rates, which we had last year, how do you think they're going to perform when interest rates fall like they are this year? And go to them, I hate banks so much, I wouldn't even touch it with Matt Buckley's money. How about that? Okay. Okay. Jeanette, I'm getting complaints about the voice quality from you, but not from me. So I don't know what's going on there. You do sound kind of scratchy.
Yep, I know it's me. I'm sorry.
I would throw away your mic. Okay. Andrew is asking, is the subscription for both Forex and stocks? We cover stocks, bonds, commodities, foreign currencies, precious metals, real estate, and energy. We go anywhere where the money is. If we see easy trades in one sector, we'll just focus on that sector to the exclusion of everything else until something else gets better. That means there's always something to do. There's always something to trade. There's always something to buy because it's cheap, sell short because it's short, and that's why you do a global macro strategy. It is the only way to go, and very few people can do that because they haven't been in the market for 50 years. Etienne, I guess you're from France, just subscribed. Thank you very much. Merci, monsieur. And I'll see you at a future lunch in Paris or Geneva, or you can meet me this summer in Zermatt at my home, and would love to meet you in person there, and you can write off the vacation at the same time. There's more questions here than I can read, so if you have any more, just email them to Jeanette, or better yet, subscribe to the service for $4.97 and email me directly, and I will either email you right back or I will call you, because we get your phone numbers there with subscription. I love calling people. I get some of my best trading ideas for my own subscribers, and I love seeing what the world is like. I can see we only have, anyway, I can get another hour, Jeanette, so I can answer the 300 questions that are still in here. The book is the PDF,
no,
Kevin. Yes, it is. And that also downloads automatically the second you buy. You get the PDF on stocks to buy for the coming Roaring 20s. I'm going to just keep interacting, answering questions, Jeanette, until you interrupt me. Let's see. Here's another question. How do I get started trading? Just go to any major trading account like Charles Schwab, Interactive Brokers, or TradeThirsty. It takes 5 minutes to open an account, a day to fund it, and you can be off. Or you can just subscribe to our service, read the research, and learn how to trade before actually executing a trade. You actually do much better that way than starting cold with real money. I always tell people to start paper trading in the beginning when you're comfortable with that. Do one trade when you make money off that. Keep increasing the size, and eventually you'll be throwing around 2,000 contracts a lot like I do. Where does Amazon go in 10 years? Nick wants to know. Answer, I think within 5 years they will break up Amazon into 3 or 4 major companies, create $1 trillion in extra market value doing that, and by then Amazon will be the world's largest company. So a triple in Amazon from here just on earnings growth, and then a breakup like they did with AT&T about 35 years ago. Am I still good?
No, we're ready to close it down. We are ready to move on to our next speaker, and I appreciate you so much.
Okay, well, thank you very much. Those who've already signed up, I look forward to working with you in the coming 3 months. And Jeanette, see you in Vegas, and thanks for inviting me on.